Hello and welcome to AI Market News by LM. It really feels like the market is on a knife's edge this week. Everyone seems to be holding their breath for a couple of critical events that could define the whole financial landscape as we head into 2026.
So yeah, there's this real sense of anticipation just hanging over every major index. It's creating what traders call a risk-off environment. So what's behind all this global caution? Let's get into it and break it down.
All right, let's start with the big picture. Right now, investors are pretty hesitant to make any big moves. And honestly, the numbers, they really reflect that cautious mood perfectly.
So US equities kicked off the week on the back foot, with the tech-heavy NASDAQ leading the way down. The dollar's also feeling a bit of pressure, and you can see currency pairs like the dollar-yen are just holding steady, kind of like a coiled spring, just waiting for the big news to drop. It's a textbook picture of caution across the board.
Now, this isn't panic, not at all. It's more of a strategic retreat. We're in the last full trading week of the year, right? So traders are just being smart, choosing to book their profits and dial down the risk. And why? Well, because two massive, potentially market-moving events are just around the corner. So what's the first big event we're all watching? It's the one piece of data everyone is waiting for, the U.S. non-farm payrolls report. I mean, this is the main event. This is the big one. The median forecast for November job gains is just 50,000. Now, to put that into perspective for us, any number that comes in below 100,000 is usually seen as a sign of a slowing labor market. So a number this low, yeah, it's got traders on super high alert for a pretty significant cool down.
And at the very same time, the unemployment rate is expected to tick up to 4.5%. If that actually happens, it would be the highest level we've seen since 2021. Just another really clear signal of a cooling economy.
But here's where it gets really interesting. There's this fascinating wrinkle coming from various news commentary. Apparently, Fed Chairman Powell privately believes that the official numbers are already way too optimistic. He reportedly thinks job growth is overstated by 60,000. I mean, do the math. That would mean the economy is actually losing 20,000 jobs a month. That suggests there's far more weakness in the labor market than the market has even begun to price in.
And this all brings us to the really crucial question. How is this jobs data going to impact the Federal Reserve's next decision? Believe me, the stakes could not be higher.
And you know, this is not going to be a straightforward decision. The Federal Open Market Committee, the FOMC, it's like a house divided right now. A weak jobs report could be that one single data point that finally tips the scales for the entire committee.
On one side, you've got officials like Boston Fed President Susan Collins, and she's warning that the path forward is getting trickier. But then on the other side, you have New York Fed President John Williams, who feels the Fed is already well-positioned. This kind of internal debate just makes it incredibly difficult to forecast what they're going to do next.
But you know, despite the Fed's own internal division, the market, well, it seems to have made up its mind. The CME FedWatch tool is showing that traders are pricing in a whopping 90% probability of another rate cut. The market is basically betting that weak data is going to force the Fed's hand no matter what they say.
Okay, so let's zoom back out for a second and take a look at how all this uncertainty in the US is creating these ripple effects all across the global markets. The Fed's decision doesn't just happen in a vacuum, right? It has a huge impact on global currencies, and we're seeing traders positioning themselves very carefully ahead of the news.
A perfect example of this is the dollar-yen pair. As we can see from the prepared resources, trader positioning shows this heavy concentration of buy and sell orders all clustered right around that current price of 155. What this tells us is that the market is bracing for a really volatile move, a move that's going to be driven by both the US jobs data and that upcoming Bank of Japan rate decision.
Now, over in the stock market, the mood is definitely shifting too. Those super high valuations of the big tech companies, they're starting to come under some scrutiny. At the same time, the prospect of the Fed easing up on its policy is making investors take a fresh look at smaller companies, which could actually do really well if interest rates start to come down.
Okay, so to wrap things up, what are the absolute key events that we all need to be watching for the rest of this week? Based on information from investing.com, here's the schedule. Everything really kicks off at 8:30 a.m. US time with the non-farm payrolls and the unemployment rate. These are the big ones. Then later in the week, we get the Bank of Japan's rate decision. Every single one of these events has a high potential for some serious market impact. And that really leaves us with the ultimate question, doesn't it? We've got a weakening labor market, a central bank that just can't seem to agree on the path forward, and a market that seems to be priced for absolute perfection. So, Is this the setup for that celebrated soft landing we all want, or are we about to hit some serious turbulence? Only the data will tell.
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.